Oh, that's cool. There we go. There's the chat. Welcome, everybody. Yeah, I got a nice little full house here. Kimberly in the house. Sorry about starting a minute late there. Just piled higher and deeper, you know. So, morning, everybody. Welcome back to the Morning Monster. And, I logged into my PayPal account the other day, to pay for questionable things for Christmas that people probably didn't need. And what do I see? A big friendly button for a business loan. And then I get an email from like a car insurance company, the one that I pay to protect me from financial ruin. They're offering me a loan. Car insurance company offering a loan? I mean, I'm just waiting for the grocery store rewards program to offer me a mortgage at this point. I mean, sir, for 200,000 loyalty points, we can offer you a 30-year fixed loan on a lovely 2-bedroom condo. I mean, it feels like everybody and their mother wants to lend money out there. And the funny thing is, none of those people are traditional banks. And this is what we call shadow banking. Shadow banking. So it sounds like a villain's lair from a Bond movie, doesn't it? And honestly, it's kind of not too far off. This isn't your friendly neighborhood bank or, it's not the people you go down and sit down, you know everybody, they've known you for years. It's not what we're talking about here. This is a financial wild, wild west. It's a sprawling, what's turned into $250 trillion system of lenders that aren't banks. We're talking about hedge funds, insurance companies, giant private equity firms, and they're all getting their cards in this lending game table. But without the pesky rules and regulations that boring old banks have to follow. Think of it like this. Traditional banking is brightly lit. It's a regulated casino. There's cameras everywhere. The pit bosses are watching the dealers. The government, well, they watch everything. The shadow banking, it's a different game. That's the high stakes poker game happening in the secret back room, or maybe the go down the alley and knock on the door and get in the back. The buy-ins, they're huge. The players, they're all anonymous, and the only rule is, well, I don't know if any rules there are actually. And here's the kicker: that backroom game, it's now bigger than the entire regulated casino. For the first time ever, these non-banks hold more than half of all the financial assets on the planet. And they're growing at double the speed of the traditional banking industry. So what's the big deal? Right? Maybe you like the sketchy backroom casino. That's where the real action is. That's where fortunes are made and lost. And you're not wrong. But let me tell you a little story here. A company called First Brands, we've talked about them in the past. They sold car parts. If you're maybe new here, you haven't heard the story. Wiper blades, spark plugs, normal car part stuff. And they were on a roll, borrowing tons of money from the shadow banking world to buy up competitors. They had 25,000 employees, a real American business producing real American stuff, until it wasn't. Turns out the CEO was allegedly playing a little fast and loose at the casino and doing stuff like faking billions of dollars in invoices and then selling them multiple times, fast and loose with the money. The company imploded, went bust, and all that money from those private lenders, gone. Poof, into the shadows. This is the risk. There's no transparency. These firms get to grade their own homework. They use something called mark-to-model accounting, which is a fancy way of saying this loan has got whatever value I feel like it has today. And it's not based on the real market. It's based on how I'm feeling today. Did I wake up? Did I drink the purple mustard? Did I drink the red? And when the vibes turn bad, these loans can be marked to zero. Even the big dogs kind of getting a little nervous. Jamie Dimon, the head of JP Morgan, said when you see one cockroach, there's probably more. And when the king of Wall Street starts talking about cockroaches, you know it's not just a pest problem. It's an infestation. But here's the thing about infestations. They can be profitable. And if you're not afraid to tinker with a few cockroaches, this is where you, my savvy trader friends, might be able to take advantage. Because where there's chaos, there's cash. So how do you play this? First off, you can embrace the shadows. You can invest directly alongside the giants. Business development companies. This is a place where Goose has been playing pretty, you've been there quite a bit there, Goose. We're talking about F-16 Goose in the chat, Lieutenant Colonel. And, these BDCs, they're publicly traded companies that are basically mini private credit funds for common folks. The big ones like Ares Capital, tickers ARCC, they're kind of behemoths in the space. You can also look at the puppet masters themselves. We have Apollo Global Management, APO. We have Blackstone Capital, BX. And we have Blue Owl Capital. These firms are running high-stakes backroom games all over the place. They're risky, but they offer yields that they're not boring. They're quite exciting. You just can't get these kind of yields in the regulated world. And it's kind of crazy when you start really looking at what's going on. Now, number two, there's the shadows light, right? Maybe you don't want to play in the sketchy back room. Maybe you just, want a little taste. Well, you can invest in companies that we see every day that's part of this world. That would be PayPal, Stripe, Square, Block, XYZ, I guess, PYPL. The buy now, pay later stuff, Affirm, they're still in the shadows, but at least they're kind of out in the public. They're at least part of the room where a little bit of light gets in. And finally, there's this 2008 all over again type of play. If you're kind of a real cynic, you think this whole $250 trillion shadow banking house of cards might come apart at the seams because it's just the Wild West. There's no rules. You could look at ways to bet against it. Shorting BDCs, for example. But this is quite a dangerous game. You better be sure you better be sure on your bets. Because there's a lot of sketchy players. Be careful before you start dancing with the bears. So there you have it. That's the kind of secret multi-trillion-dollar banking system that's out there. Just wanted to give you a little taste of it. It's opaque. It's risky. It's probably going to cause some headaches for the global economy at some point. But it's not going anywhere. The returns, too fat, too juicy, too good. The demand for credit, way too high. I opened a line of credit tied to a credit card. I met with somebody on Zoom, and a couple of days I had the whole approval. It was crazy. I literally did that, and they filed the paperwork and it seems pretty legit, but it's amazing, and it's a Visa card. It's the traditional banking. This wasn't a regular bank. It's tied to regular banks, but it's not. This isn't powered by Chase or powered by Capital One or anything like that. So it's kind of interesting. This is a revolution in finance. Or maybe it's a ticking time bomb. The answer is probably yes to all of those. And that's it for the monologue today, everybody. Welcome to the last trading day of 2025. The last trading day. Jumping over here, all trading involves a substantial risk of loss. If you trade, if you get involved in anything, you might lose your money. Past performance, not necessarily indicative of future results, just because I've made some money this year and showed you how to do it doesn't mean that we'll keep doing it. I make predictions, sometimes they come true, but I just have a bag of unicorn dust right here. You can buy one yourself if you want to. Friction Labs makes it. It's a bag of unicorn dust, sprinkle it on the market when I can, but there's no guarantees, no crystal balls. Yeah, somebody was like, just tell me which trades are the good ones and which ones are the bad ones, so I know which ones to take and which ones to not take. I was like, okay, literally, you're asking me if I have a crystal ball. Like, that's said a different way. That's the question you just asked. Tell me which ones are the good ones and which ones are the bad ones. The systems I built are all the good ones. It's the same price pattern all the time. If I knew which ones were the bad ones, they wouldn't be alerts. So this presentation intended to be informational, educational, fun, entertaining, not a recommendation to be buying or selling any financial instrument. So don't trade stocks, options, bonds, forex, futures, cryptos, treasuries. If you trade them, you might lose money. If you want somebody to tell you what to do, there's people you can hire for that. That's not me. I'm just a guy that does some trades. I get lucky, make a little money in the market here and there, but I don't have a crystal ball. I don't know what's coming next. I don't know for sure. All right. I got some theories. I got some ideas. And we're getting a nice little pop coming in at the open here this morning. Maybe we can get a rally. Yesterday, FOMC minutes, almost a dud. I mean, it was pretty much didn't move yesterday afternoon at all. So today, I don't expect a ton of move. We may get a little chaos into the year jockeying. We may see some social media posts over the next, say, 24 to 48 hours about repo market getting hit. This is typical, all right? Especially as we're at the end of the quarter, we're at the end of the month, we're at the end of the year, we're at the end of the half. Banks, if they have any kind of hiccup on the books at all, they're going to hit the repo market tonight and have to borrow money to stay solvent over this little 2-day, 3-day glitch, all right? So I don't think the world's burning down if the repo market gets hit. It's just usually what happens when we roll over. The books have to balance at the end of the year. If we got to hit the repo market to make the cash work, that's what we got to do. So be careful out there looking at any social media posts that happen the next 48 hours or so about, record repo market, biggest since COVID or biggest since, it's not really, like, this happened a bunch in October too. So it's not the end of the world. It's just something that kind of happens right around the end of the month. It's going to be interesting here. 2026 coming up Friday. So I'm going to be off tomorrow. I'm not going to do the show tomorrow. So be careful out there. Enjoy time with family. Enjoy the day off. I'll be back on Friday and we'll start it off. So start off the new year right. Today, don't really expect much. All right, we got like half the world already shut down for New Year's. We've got, we're going to be getting close to, like, part of the world's already going to be in 2026 here soon. So tomorrow, like I said, shut down. Friday, I don't expect a lot to happen on Friday either. It'll just kind of be the first trading day. Next week is really when everybody kind of comes back to work. Jump into the new year. So we'll jump forward a whole year instead of a month. So the 5th, probably the first normal day we might get after this holiday. Could be some chaos. Could be a lot of fast action. We've just kind of been in a drift for the last 2 weeks. And when the traders come back and everything's set back to zero, we got to make the money for the year, things might start moving. Earnings season kind of starts kicking up the second week here. I'm looking at it like that's the first full week, 5th through the 9th, then the 12th through the 16th. That's where we get financial earnings start kicking up. Big tech starts coming in the last week there. And we have an FOMC meeting also coming up on the 28th. Another FOMC already. So that'll be the first rate change announcement of the new year coming up at the end of the month. So probably not going to be without interesting events. One thing I wanted to show off here is I guess you might say the evolution of narrative. I just want to pop this up and show it off real quick. It's kind of an interesting chart. This is kind of our attention span. Now, there's some things that held our attention all year, like inflation. But you can see this is starting in January 25 here, rolling out to basically last week, and you see each narrative lasts roughly 2 weeks. We kind of hit a peak. Very quickly, we get fatigue on the news. This is the kind of the flow of the narratives all year long. You can see we started out with Palisades fire, all sorts of stuff in here, Doge and Zelensky and ICE and LA, whatever, and Taco, and it just comes all the way down here, 6, 7, even social media trends. But this kind of shows you that there's an evolution in narrative, and it really only piques our interest for a short duration. Even when it shows back up several times, the only thing that seemed to kind of hold on was inflation all year. And Labubu had a pretty good run, but it tapered off into the holidays, funny enough. So that's just a doll. And so we get fatigue on these narratives. So what's it going to be? What's the theme of next year? There's probably not a theme of next year. I mean, unless we get like another inflation kind of thing rolling all year. But in general, there won't be a theme. It'll be a cascade of topics that shift about every 2 weeks or so, where we're where we're paying attention. Maybe even every week. That's the news cycle. So I thought it was fascinating right there, how it kind of, the evolution of where our attention goes, what matters. The mainstream media will put reasons to why the market moves. And it's always got to shift like that, because that's where the attention is. If we just said the price moves because of the price patterns, nobody'd want to watch the news, and then they couldn't sell advertising. So be careful out there. I use price patterns to try to predict where we're going. And this pullback, potentially done right there on ES. Potentially done. We'll have to watch. We're still kind of in the same ballpark we were yesterday, though. When we really dive down in here, pull this up, pull this in, grab my magnifier. Getting a little sell-off here at the open. Interesting. Pushing down below. This could set us up for a bigger downswing here. Interesting. So pushing down below that low, first move down. This was kind of a triangle. Right here, watermelon seed squeeze. That would be the A. This, despite it being kind of small, B. Continuation, C, right down there. It's actually pretty interesting that we're breaking down below that. I'm not sure where to put the That's the thing about B waves. Never sure where it's going to go. We could be down here. So 1650, maybe where we're heading with that push down here this morning. And let's see. Let's go look at old pal NASDAQ. Same situation. First move down, retrace. Right there. Despite the pop coming in the open, Wrongermer may make out like a bandit here today. So there you go. That may last into Friday, first trading day. Remember, we have 250 trading days next year. 250 days of trading to make your year. You're like, wait, there's 365 days in the year. Yeah, but the market's only open 250 of those. So, got to make every day count that's open. That's what that looks like right there. Same on, it's got the same pattern S&P, same pattern NASDAQ. Russell. Jump up to the daily and check this out. Where, yeah, let's see. Very interesting. We held on to the low. Just barely. Just barely. If this turns red, if the other two indexes pull this down, you know, if these guys start pulling us down, this one may turn red and accelerate down into here. Probably going to come down to at least 2430, if not on down here around 2380. And that could definitely spill on into next year, first couple weeks. Oil still consolidating right here under the downtrend. Still set for a visit down in low 50s. Gold, look at that push down. You know, we're back testing the breakouts, and we're kind of pushing. You know, that was a deep test right there, getting bought back up. But this is starting to open the door for that bigger retrace. This went a little higher than I thought we would, but still in a corrective type potential. Bitcoin still sitting here. So this itself, similar to S&P and NASDAQ, this is starting to look like a B wave. The problem here, though, is like, where did we start this thing from? Is that the A, this is the B, and then we get a C, and we don't have much room left for any downside before we go lower low? Or was that whole first move up A, this whole thing B? You know, it's this choppy overlapping consolidation that we've been, you know, we haven't really gone anywhere since right before Thanksgiving. Bitcoin's just been sitting here consolidating. Now, I pointed out something interesting last night during 30 Minutes of Awesome. And if you're really interested in Bitcoin, you should go watch that. I talked about some interesting analysis relating to gold and Bitcoin / crypto. Ethereum kind of in the same boat here. We've just been sitting here consolidating since before Thanksgiving. Need to break higher than the roadmap line to get some upside going. NKD, global liquidity, still in a downtrend. And this may be telling us the story here that we're going to see a bigger correction in risk on assets, which pretty much the US market and crypto and even gold, kind of a risk on asset. If we get a flush out in global liquidity, which I kind of use this as a proxy for that. We get a flush, probably going to see everything correct pretty violently, maybe, depending on the speed. Dollar sitting here has triggered the potential to come on down to a lower low than what we had in September. This could last a few months, even like 6 months next year before we finally get down there. Probably hunting a bottom down in the 95 area, 95, 96. Apple pushed down below its uptrend. Watch out. This can, if we get that bigger flush outs, everything's kind of lining up too good for a bigger flush out. So caution here on Apple. Caution here, lower highs. This can go on a bigger flush out. Google struggling here. Hasn't confirmed we're going on up to tag that 337. It's a small time frame pullback. Just like an hourly chart here. There's the high, here's the low, and we're struggling right under that 618. So we haven't confirmed we're going to go popping up on to that 337 area. Haven't confirmed it. That can open up the door to go on down, retest the bigger consolidation right down here at the roadmap line. Meta still needs that pullback somewhere around 630. Microsoft. This thing is held in here. And as the roadmap line arcs off, this thing keeps pushing down just a little bit more. So we got some down pressure on it. If we break down below the low we made back here in November, probably taking a bigger spill, similar to what Meta did. Meta took that bigger dive down here to the 618. Might see Microsoft do the same thing. Also seeing this one below resistance. Can easily come back test the breakout from last year. We made those highs in December last year. Probably going to come back and back test. I feel like a broken record because I've said this for days on all these tickers. Nothing's changed. Tesla did get the upside. Small target off this pullback. Now we're pulling back again. Probably going to find support somewhere down around 420 to 435 area. That could last a couple weeks into earnings. Netflix consolidating right here. This could just kind of sit here and consolidate through earnings. We'll see. But we're sitting on support here. Rally back to the roadmap line. That's what I expect next for Netflix. I go pull gainers. There weren't many on the list today, and it's mostly a bunch of garbage. I could tell just by the tickers. Few things in here. I go pull decliners, and the gainers are things moving $2 or more up in the pre-market. Decliners are things moving $2 or more down in the pre-market. And I have one ticker that was set up with an potential entry today. So look at this stuff. Healthcare, even though it says financial conglomerate, it's healthcare stuff. Be careful. AXSM, another biotech pharma. When biotech dominates the list, it's a day to be careful. ESHA, SPACquisition. That can easily come back down. ASPC, another SPACquisition. TSM, due for retrace despite the pop. Cold, chopping around. That's natural gas short. So that means natural gas must have taken a little spill down to the roadmap line. Interesting. Rejected off that big 618. Yeah. If we do the retrace now, it sets us up for a potential rip. That could be interesting. So between now and April, we usually pull back on natural gas. Isn't that interesting? Or March, March, April. So we have this yearly pullback that usually happens. April's usually the time we bottom out. We usually top out. Right, come on, zoom her up, baby. right there in December. So we potentially already made the high in natural gas, seasonality wise. Usually make the high in December, the low in April, and then we run it back up to the next high in December and back into the low in April. So we could make a low down here, March, April, right where I've got it drawn, and then go on for the new high next cycle. Not really super tradable, but there you go. The short-term cold might rally into April. Doesn't mean it will. It's kind of a tough play. So you see this doesn't move much, typically. ABVX, more biotech pharma. Yeah, I even have a button for biotech. Like, that's how dangerous playing it is. I just don't even try to predict biotech. NVDU, 2x leverage on NVIDIA, showing up on the list, but like I said, NVIDIA has the potential to go lower, so please be careful. That's been going absolutely nowhere for a while. CRT, ouch. Another biotech pharma. AGQ, taking a step back with silver pulling back. Silver, SI1 expiration point. Yeah, we can see silver come back down. Be careful. That got way over the ski tips. Coming back. PPLT. You know, we can see all these precious metals chop around a little bit. They all hit kind of upside targets. So, you know, silver, I expected to SLV, put my fingers on the right keys. We hit that 1272. This was on a bigger time frame chart too. Oh, that was cool. God, I love it, man. See this pullback? This high from back here in 2011, this low back here in 2020. Coming into this year, I was talking about how this is probably going to be the biggest play of the year. We did it. That was it. Does it have to go any higher? No. That was it. What do we usually see after we hit this? Go back to the roadmap line. All the way down here. That's usually what happens. More like, I don't know. I don't have a statistic on it, but it's like 75% of the time after we hit these targets, we retrace all the way back down to the roadmap line. Now, does that have to happen for silver? No. Does that have to happen for anything in particular? No. Could it be the 25% that goes on to higher levels? I mean, yeah, sure, possibly. You know, 35% of the time, I guess, we can go on to higher levels. You know, 70% of the time we hit the 1272. 35, maybe lower. You know, depends on the ticker. But that doesn't mean we don't retrace back here before we go up there. Drops way on off, coming on up here. And we get down to like less than 1% of the time we would come all the way up here, but I don't think we're doing that on silver. $225,000 an ounce. I don't think the world's going to be ending at that kind of price. So odds are we're going to get a retrace. Just be careful out there. GDXU. Chopping in here. This can come back down. That's a leverage on gold miners, so GDX. Pulling back off the high just a little bit. And what else we got in here today? Nugget. Coming off the high a little bit. Oil dropping. This is kind of the opposite of cold. Natural gas going down. Now, this is a declining asset, so you're like, oh, just buy some puts on oil. Probably not going to work out for you. This thing tends to trend down, and they price it into the puts. So, PALLL, Palladium. Man, that hit the target and Came all the way back down to retest the breakout there. Maybe gunning for the roadmap line. That's possible. On a support and a turn back higher, this would be a one to look at because palladium and platinum both look like they have more upside to go when you look at the futures chart. And we did reject the 618 right there. But if this comes back up through, probably going up here. That would be a big opportunity. Same kind of thing on platinum. Although we did spike a higher high already. So palladium's kind of the laggard here. But platinum didn't quite hit the upside targets. So 28 and 20. 28 and 33. And then possibly some higher targets up there, maybe around 555. And the one setup today, PCG. Just a little baby bounce right here. Oops, that was not what I tried to click on. Got this high right here. We got this low right here. Zoom her up, zoom her up. Close above. Sets the target up here at 1740. Now be careful. 53 trades, 75%, 1.3. Just a real standard, normal kind of ticker. That run could take 45 candles. That's 45 trading days. That's close to 4 months, 3 months, 3 months. And then standard deviation is 35 candles, and 3 of those puts us up at 150 candles for the 99th percentile. So if you're trying to buy options and not run out of time, 99% of the time, you need to have like 7 months. And that's a long time for something like this. So shares are the best way to play if it's going to be a long-term play. I don't have a way to tell if it's going to be a long-term play or a short-term play. Could play out in 2 days and could play out today. I mean, we could spike it up here today, be all done. 45 is the average. That means half of the time we go faster than 45 days. But the other half of the time can last all the way out to like 7 months. And then 1% of the time can last who knows how long. That's the one setup I had today. Like there wasn't anything else out of the 4,000 tickers that I check every day. Nothing else out there. Bias for the day, kind of the downside. It's what we're kind of confirming here. We're going to take a bigger trip down. Be careful out there, everybody. Get a little bounce here, though. It doesn't have to move today. It just looks like that's what we're going to do. Just looks like it's going to erode on down. Look at the gamma. What's gamma tell us into the end of the year, in the beginning of the year? So we've got this big gamma level, 615 on QQQ. And as I talked about, we may drift on down there to visit that by Friday. We got today, close day, and then Friday. So downward pressure on the gamma. You say, what the devil's gamma? It's options. Market pressure on market makers. We tend to go screw the most number of people we can. And right now, 684. So I'll push down in that 68.50 area on S&P. Would screw the most number of players by Friday. It's all looking too perfect. So, crystal ball, baby. I started reading this stuff. It's kind of like reading the tea leaves. It's kind of like sprinkling little dust in the bowl, swirling it around, and trying to read what the options market's telling us. Right there, looks like we're potentially going to push down at least into Friday. After that, Wild West, there's not really much levels out here. So we'll see what happens starting Friday. I'll be back with you on Friday. Have a great day, everybody. Last trading day of the year. Be safe out there. I'll be in Discord. I'll be on Market Masters at 11:30 too. Links in the description down below. If you want to come hang out, 11:30, Jack and I hunt for what we can. Talk about income opportunities. I'll show off the fact that, dun, 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 dun. Look at this baby, $51,000. Crossed that yesterday. For the year to date, $51,000. Talk about that. So come hang out. Otherwise, I'll see you on Friday. Same bat time, same bat channel. Be safe out there this evening. Happy New Year. And